A historic debt crisis is coming for the United States in just a matter of months. We are that close to another potential default, and it's all thanks to rate hikes. So we know the interest rates have been rising, and the Fed funds now stands at over 3%. And as this number goes higher, the US national debt is ballooning bigger and bigger, but most people don't care, right? In fact, a lot of us we are forgetting this ticking time bomb even exists, and it could take down the economy and the US dollar as well when the bubble pops. In fact, this is probably the final crisis before the Great Reset happens. After this pops, we'll have to redefine what money is because the dollar, the world reserve currency, will be toast. So, how bad is the national debt today? We are talking about $31.1 trillion disaster. It is not Bitcoin going to the moon, but the national debt. And we can see that since 2008, especially from 2020, the debt has been out of control and heading north. And because interest rates have to continue rising to fight inflation, this debt train is headed for a real ugly crash. Now, every time the Fed hikes rates, the interest payments on the debt will also rise. Remember, the debt is funded by both short term and long term debt with maturities from 3 months all the way to 30 years, and they will have to roll over this at a higher rate now. But here's the dangerous situation: the yields of all US treasuries have soared and they will only go higher. We have the 3-month T bill at 3.5% yield, the 12-month at 4.2%, and the 10-year at 4%. So it's a bloodbath when it comes to the debt repayments. And if we take a look at the 10-year treasury just in 2020, the yield was well below 1%, and now it is touching 4%. So when you roll over the old debt to this new rate, the borrowing costs have quadrupled. So why is this a big deal? Why talk about the national debt now when inflation is the biggest enemy? And it's because the debt ceiling is about to be breached once again. I'm sure you remember just last year when the US government almost went into a shutdown, right? Well, it was all about the debt ceiling. One side wanted to keep borrowing more, while other lawmakers were sick of the out of control spending. And after a lot of debating, they decided to raise the debt ceiling once again upwards from 28.9 trillion to prevent a default. The US debt ceiling today is $31.4 trillion, and the national debt is at $31.1 trillion, guys. We are only $300 billion away from hitting it. Money is being spent to fund the war in Ukraine, it's going to fund climate change, and this is going to balloon the government spending even more. We can see that just in 2021 alone, the US government took in $4 trillion in revenue and they spent 6.8 trillion. And this leaves us with a deficit of nearly $2.8 trillion. And how do they fund this? They sell US Treasury bonds to investors. It doesn't matter if it's China, the Federal Reserve, or local American investors. The national debt is increasing. And this is a classic example of how government spending is at odds with the monetary policies of the Federal Reserve. You have Powell desperately hiking rates on one hand, while the current administration is spending money like drunken sailors on the other hand. And this is why inflation is still sky high, and now there is a national debt crisis that will surface in just a matter of months. And we need to talk about this. You cannot keep borrowing money forever, even if you are the United States. There's going to be a lot more chaos going forward, guys. We're talking about potential government shutdowns, a lower standard of living, higher inflation, and asset prices collapsing. And the problem with higher rates is that the interest payments are going to spiral out of control. In fact, there have been studies that project an additional $1 trillion of debt will be incurred purely from the rate hikes alone. Now, normally having some debt on the books is fine. Every country borrows money. As long as your country issues bonds or they take a loan, it is considered debt. But the big problem comes when the debt gets out of control and becomes more than the revenue the government brings in. Taking a look at the US government revenue in 2022, we can see they collected around $4.4 trillion. Now, if we look at the treasury numbers, we can see they have allocated $677 billion to service the interest payments on the debt. And this means over 15% of government revenue goes into just servicing the interest payments alone. And if we compare it to the government spending, that's still over 12% of the total bill. Now, this is very problematic because the higher this number goes, the less the government can borrow to keep this game of musical chairs going. Now, two critical things are going to happen back in America. Firstly, the amount of tax revenue available to spend is going to shrink. And this means benefits like Social Security, healthcare, and veteran benefits are going to get squeezed. There's going to be a lower standard of living for people there, and a lot of national projects are going to grind to a halt. But the biggest impact is going to be the confidence of investors when it comes to US treasuries. People are going to ask themselves, can the US government pay back its debt over the next 10, 20, or 30 years? Are they going to default? And this means that investors will get spooked and the yields on the US treasuries will have to rise. The US government has to issue new bonds offering higher interest rates to entice investors, both domestic and abroad, in order to buy them, right? And this will unleash a deadly chain of events that will lead to a horrible slowdown of the US economy. When rates rise, borrowing costs are going to skyrocket. And that means your mortgage rate is going to rise, and companies will have to pay more for loans, and they will pass the additional cost down to consumers. And ironically, this will cause higher inflation while you are bleeding more money thanks to higher mortgage payments, right? And if this is bad enough, it will spiral into a full blown economic crisis again. Now, the US economy could have a lost decade like Japan if the bubble pops, and that's why debt ceiling they have been raised time and time again. The government cannot afford to default, they have to kick the can down the road. But the real damage of a debt default is going to be done to the US dollar. So we know the dollar is the world reserve currency, right? Everyone knows this. And because of that, there's a constant demand for it. If we take a look at all the currency crises popping up across the world today, it's largely because money is leaving other currencies and flowing to dollars. And this is why, relative to other countries, inflation in America isn't that high yet. And the yields on treasury hasn't spiked to the moon just yet as well, because countries still trust the US dollar as a store of value and a useful medium of exchange. But I want us to recall what brings the dollar its value again. Now, it used to be three things, right? But since the gold standard was broken back in 1971, we are down to just two pillars that are supporting the dollar as the reserve currency. Now, the first is the petrodollar, which is under threat. Saudi Arabia and OPEC only sells their oil in US dollars. So there's a natural demand for the currency because OPEC controls 60% of oil exports and every country needs energy. But if you have been reading the news, you know the situation on the ground. The Saudis have gone against the United States and they're cutting oil production even when energy prices are high. Biden himself has vowed consequences for these actions, so relations are very tense. The Saudis, they are just one step away from pricing their oil in another currency. Maybe it's the euro, maybe it's the Chinese yuan, and whatever it is, it will make the US dollar less useful. Its reserve status is going to take a hit. Now, the second pillar of the dollar is the strength of the US economy. Now, a currency is basically a coupon to buy goods and services, right? And the United States has the biggest economy in the world. And this means with the dollar, you can buy quite a lot of stuff in the US itself. Maybe it's land, maybe it's property or equities. But the problem with rising national debt is a slowdown of the economy and greater uncertainty about the US government paying back the bondholders. And if the interest payments become like 30, 40%, or even 50% of government revenues, there's a real risk the debt bubble will just implode. Now, this will collapse the economy, asset prices will crash, and a recession is guaranteed again. Now, suddenly, a lot of people will be unemployed. And what does this mean? Tax revenues are going to go down as well. Bond payments will spiral out of control, and we are staring at a debt default. And if a default happens, the US dollar is toast. But a big shout out to our sponsor today, Private Internet Access. We know the importance of keeping some money outside of the banking system. We want privacy for our wealth, and you should be treating your data the same way. Now, online browsing isn't as safe as it used to be. With all types of hackers and scams out there, you need to be protected. You don't want your identity stolen and any of your financial accounts compromised. And this is why a VPN is so useful. It keeps your data and activity confidential away from the hackers. And the cool thing is that PIA is completely web-based. You can download it on your phone through their app or to your desktop and you can get started, right? In fact, you can use it to up to 10 devices at a time, including your phone, desktop, and tablet. Now, PIA has world-class servers that cover over 83 countries, including each and every state in the United States. And if I'm accessing my trading and stock market accounts, I want to make sure that no one is watching me and that my details are completely private. Now, you can get started with private internet access and get an 82% discount using the link in the description below. Plus, you'll also enjoy 3 months for free just for being an awesome subscriber to this channel. So check them out, guys, and get protected today. And this is the deadly dilemma we are facing. If the US doesn't raise the debt ceiling, that will mean the government can't pay back their obligations and go into default. Social Security will be at risk, pensions will collapse, and bondholders, they won't get paid. Now, this will crash the entire bond market and the stock market as yields and interest rates start to spike. And we can see that the US has a ton of obligations to spend on, right? They need to raise $7.8 trillion in 2022 in order to meet them. And they're only bringing in 4.4 trillion, remember about that. So they have to go into deficit spending and borrow money. Because if they don't, everything from healthcare and social security will collapse. The economy will crash. And suddenly the United States will become dangerous to invest in, and there will be a global dumping of treasuries and dollars, and the cycle will get from bad to worse. Now, obviously, the US government can't let this come to pass. Having an early default now while fighting inflation is like trying to slay a dragon and battle a kraken at the same time. They will have to raise it. They have very little choice. And this is why I believe they will trade short-term pain for bigger collapse down the road. They will raise the debt ceiling again and push the problem away until debt repayments become too big to ignore. Now, this is going to be the mother of all black swan events, and we don't know what will make it explode. It might be this currency crisis that triggers countries to dump treasuries for US dollars to prevent a devaluation, right? And this could spike yields high enough to pop the bubble. Or it might be the debt interest payments getting impossible to service down the road. The revenue the government brings in just isn't enough. And in a study by the Peterson Foundation, they project that the net interest cost for servicing the debt will account for almost 40% of federal revenues by 2052. And this is a very conservative study. It is a best case scenario that has not factored in the spike in yields this year. And once this default eventually happens, guys, there's going to be a lot of pain for investors and people back in America. If there's going to be a great reset, this is probably it. And we need to prepare for the inevitable. And let's play out these debt defaults so that we can understand how to protect ourselves and to survive, right? And the first scenario is if the United States decides to print trillions of dollars and bail itself out. They choose the path of debt monetization. They go to the Fed, right, and they sell a ton of bonds to Powell and get him to print money to pay to the bondholders. And very soon, the only bondholder left will be the Federal Reserve. And make no mistake, this is also a type of default. And in this case, inflation will soar to the moon because the whole world will quickly understand that the US dollar is now funny money. And what will happen? People will want to get rid of it as soon as possible. People will start liquidating their dollar holdings for hard assets. They're going to dump dollars for real estate. They're going to buy land. They're going to buy gold. Anything that they can get their hands on that can't be printed from thin air. And this is why I keep buying precious metals every few months or so, even as prices are crashing, because I don't know when this debt bubble will pop. I don't have a crystal ball, but I sure as hell want to be prepared. Now, scenario 2 is even more interesting, but the end result is likely the same. If the US decides not to pay the bondholders and does a good old-fashioned default and resets it to zero, then confidence in the entire American economy will collapse. And in this case, investors will flee US investments like bats out of hell. They will pull out their US dollars, they will sell them off in the forex markets for another currency, and they'll just run away. And all these global dollars, they're going to flood back to the United States and cause runaway inflation. And that's why it really doesn't matter where you are in the world. If you live in America, you need some gold to hedge against this possibility. And we can see that the dollar has already lost 97% of its purchasing power, but there's still more value left to erode. The fall isn't over yet. And if there's a collapse in confidence, at least you have gold to store your wealth if things really become Weimar Germany 2.0. Because at that point of time, we won't know how much value the dollar will have left. Inflation might soar to 20% or even 30%, and we are already near double digits today. And if you're overseas, having some gold will protect you if the US government decides to default by printing money. All your dollar-denominated investments, especially government bonds, will turn into junk. Just think of it as an insurance policy, and personally, I'm still buying gold every quarter because gold is not just a store of value, but it is a credit default swap against US national debt itself. Because once confidence is lost in the system, it is already too late. So let me know what you think. Will they raise the US debt ceiling once again? Are you prepared in case of a debt default? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.